this is where I'm really going to diverge from a lot of other analysts. I think that this market is maturing in the sense that we are not, and we should not expect the same sort of rotations and cyclicality that we've seen in the past. What do I mean by that? In the past, we've seen either alt season where all alts go to the moon and beyond, or, well, alt doom season, basically. So the salt season, if you want to call it that, right? With that said, welcome back to EllioTrades channel. I'm your host, Krown, and today we're going to follow up on the ongoing thread that we've been having for Bitcoin for the last few weeks here, what's most likely in the next few weeks to come, plus what this monthly closure means for the next few months to come. And on top of that, we'll address everyone's favorite question, good old alt season, right? So if you are interested in a daily Bitcoin analysis, if you think that may be valuable to your life, I do exactly that on my own channel, which you can find in the link in the description below. And also it's free. Anyways, we're going to start it off today following up on perhaps the most important piece of data, that going to be the global open interest right here, representing leveraged positions. I want to let you know first where you can find this data so you can follow it up on for yourself. It's found on my actually my own app.krowntrading.net. So that's app, Krown with a K. .net. And once again, I'll briefly go over the explanation of this. So this represents leveraged positions. And in practice, in reality, the reason why this is valuable is that anytime that we've seen it get basically above 13.5 billion, we have seen 25% corrections or more in Bitcoin's history for the past year that we've really been focusing on this data. Specifically in the last 2.5 months, it has been suggesting caution basically this whole way down. And we've been using this as a gauge of when to actually look at the market as likely to put in a macro reversal, which means that we really want to see this reset after coming off of extremes right here, representing, the market just essentially being massively over leveraged. Right now, after coming off of our last almost $14 billion read at the test of 52,000 and rejection at $52,000 just a month ago, we can see that it is basing lower. However, we do expect longer term for this one to reset a little bit lower than this. So we're getting there. It's getting closer, yes, but I don't think we're there quite yet. Short term, however, does this play into the likelihood that Bitcoin is likely to bounce into early, mid, maybe late February? Yes, I do think so. You see the same sort of action going on right here as what we saw more recently on the December bounce from 45 all the way to 52, and kind of similar over here to the September lows. But ultimately, I wouldn't necessarily say that this is fully resetting until we see it get somewhere between the September lows at 40,000 and the summer lows at 30. Now, those are obviously USD prices. I'm talking about the open interest. So at those pertinent levels, it was just over 8.5 billion. And in this case over here, just over 5.25 billion in this case. So lower is better essentially, but ultimately I do want to see that reset before I really feel confident with calling potentially a macro cycle bottom. I think it is also worth to consider that the fear ingredient index is still working off extreme conditions here. We do see it's crawling out of the extremely fearful zone for the first time in a while, but that in alignment with price action is going to help out the bias here. So at the end of the day, price action trumps everything else, at least in the way that we look at charts. So let's start it off with Bitcoin, and let's follow up on last week's and the weeks prior to that and the weeks prior to that analysis. Where are we right now? We're still within the same range. That is okay. And the same sort of range resolutions implying greater upside or downside are still very much relevant here. That being above $39,000 on a medium or higher term time frame closure. Let's just say, a full hour or a daily, higher is better essentially. Above $39,000, yes, I would be looking for Bitcoin to work its way up somewhere between $42,000 to perhaps as much as $44,000. By the same token, I would be calling further major downside moves, in this case, somewhere between about $29,000 to $30,000. If Bitcoin does start to close higher timeframes below 34,500. Then to reference that, I'm essentially talking about our summer lows from the past year right here, summer 2021, and of course, January 2021, just a year ago right here as well. Here's the thing, and I want to follow up specifically from last Friday. We did identify this 5-day stochastic momentum signal as nearly viable, which was then confirmed last night, Sunday, 7 p.m. Eastern Time, crossing to the upside for the first time basically since the September to November run towards all-time highs. And I want to take this a step further here because this condition was now validated. We have 4 iterations in the past where this level, specifically this green bar down here, has been tested in the 5-day stochastic momentum history. And I've outlined them with all of these green vertical bars. And if we go onto the charts right now, you'll notice that those price points match up with some pretty impressive major lows, all of them but one, but that is, well, still pretty damn good, might I say. I'll show you the last time we saw this signal hit off at that same level. That was, of course, at the 3100 macro cycle lows from 2018 to 2019. Keep in mind, even from that price point to really price action moving in that direction took about another 2.5 months, actually. But it did eventually go. The time before that was your 2015 macro cycle lows right here. And again, it took a few months before things really got moving to the upside. In fact, even retests around the lows a couple months later, or not a couple months later, actually about 8 months later in August. Before that, there is one iteration of this signal right here, which was not a macro cycle low. You can see that this was from October 2014. And over the next couple months here into November, we did see a pretty impressive bounce, 75% to the upside. Eventually did fail, so do keep that in mind. But even on a failure call, did produce a nice move. And then the other and only iteration that we do have is coming in here from the Genesis, October 2011, getting the macro cycle low right here yet again. And I want to highlight that this still took, a few months after that in order for price action to really get going. So we actually do officially have our first cross the upside right here. This criteria now needs to be maintained for the signal to be viable, but we got the next piece of the puzzle essentially. And it will be viable as long as Bitcoin is closing above where? 34,622. Essentially the same area that I suggested for, well, in this case, major downside continuation sooner before a bounce. So I would put the probabilities on an upside try first. That is, again, validated by a full hour closure, preferably higher than that would be better, but probably gets the job done in this case, above $39,000. And the targets after that can actually be brought up, well, quite a fair bit, to be fair. So let me pull you on over, or actually, let's just do it right here, where the relevant targets be. Well, first things first, 40,000 to 44,000 would be very much relevant. However, I don't think that things would necessarily stop there, to be quite honest with you. I do think what's more likely here, but also sombering, is a move if Bitcoin does validate above that next region, somewhere between the 0.5 and the 618 Fibonacci retracement. That is between about 45 and just under $50,000 territory. Why is that? That is your traditional bull trappy region. So if you were to get a bull trap within this region, assuming you even validate above this first area first, it's bad alliteration right there, then, well, we would be cautious of any sort of a lower high weakness right here, and specifically any sort of comeback and closure below the $40,000 region. If you see a bounce right there and a higher low or anywhere above there, that would be a really, really good sign. Or at least my confirmation of macro bullishness from that point would be then traveling back up specifically above $50,000 on a higher time frame closure. That would look really, really good. Start to talk about plan B targets yet again after that. Until then, be aware of what's at stake here. Okay, speaking also what's at stake, let's bring up the topic of alt season. So I did a video on this like a long time ago on this channel, and well, this is going to take a lot longer than what I first considered to play out, but I think we're finally there. So before, I was suggesting that this was likely to break out way back over here in October. I was completely wrong about that. I always want to be 100% directly clear with my failures, because this would certainly be one of them. But I suspect that right now is the time to be looking for a general continuation on this, or general reversal on this. Why is that? First and foremost, we are seeing the same levels on Bitcoin dominance that we saw on the last macro low before this one going up and to the right for the next couple of years. That was essentially in January to February of 2018. Not only that, but on the monthly right here, we're working on something very simple but very powerful. Being that this is a higher time frame, we can look at this and judge that it is certainly a bullish engulfing. What does a bullish engulfing mean? It means that we have seen this current monthly trade below the low of the prior month and is now engulfing the prior month by trading above and potentially even closing above the high of December. That is a very strong reversal formation, especially on a higher term time frame like this, which is also accompanied by regular bullish divergence right here. What is bullish divergence? Divergence, specifically with respect to momentum oscillators like the RSI, which is what I like to use for this purpose, shows that when we have a divergence between price action and momentum, very likely going to get a move in the opposite direction of current trend. So you can see right here, the RSI momentum oscillator is making a higher low over the last few lows right here compared to where we're at right now, while price action, or well, the dominance has been making lower lows. So very, very likely a nice move up, at least to 45%. Personally speaking, I do think that this will be the breakout move, and we will see this move into 50% over the next, 4 to 5 months, something like that, maybe even higher over time. So what does this mean for the general market? Well, I think that this is not going to be the same meaning as what we've seen many times in the past. Un momento, I need to actually take a quick sip of this before I finish this thought. Apologies on that. Okay, good for another 5 minutes, I think. Sorry, throat getting a little bit dry. And then also I should denote that we are working off extreme conditions here on volatility. So once you see that, usually going to see a bit of a mean reverting play. In this case, that likely implies upside. So what does this mean? And I think this is where I'm really going to diverge from a lot of other analysts. I think that this market is maturing in the sense that we are not, and we should not expect the same sort of rotations and cyclicality that we've seen in the past. What do I mean by that? In the past, we've seen either alt season where all alts go to the moon and beyond, or alt doom season, basically. So the salt season, if you want to call it that, right? That was essentially from 2018 all the way to 2020. So nowadays, I do think that we are evolving as a market. The market is maturing, and what does that mean for the participants or the assets within this market? They're likely going to favor the legitimized ones. I do think that the hype sort of cycles in this market are going to slowly die off from here, and you're very likely only going to see the legitimate projects survive during this next segment of the market. While I do think that Bitcoin is leaning a little bit more towards short-term, medium-term upside into February, maybe even March. I do still have a bit of reservations for the few months after that, to be fair. We can cover that in a different video for right now, but I do want to see a few other things confirmed before I really get on that topic. More importantly, however, I would expect that most alts are going to get washed out in the next year or so price action. Similar to what you saw back on over here, but more relevant is that we're probably going to see most of the projects from this past year that did not, that really don't have any fundamental reason to be playing in this market, they're probably going to get washed away. I don't think it's going to be like prior cycles where you see kind of everything get brought back on up, over a long enough time horizon. I do think that now quality is going to start to prevail more than just the fact that you're, crypto in this market, which is rather forgiving. So it also needs to be mediated with the macro condition as well, with the sense that, the Fed is going to be pulling their liquidity and then also raising interest rates. So free money, or not free money, but money is going to be a little more harder to come by, and liquidity is very likely going to be pulled from the markets. Liquidity very likely gets pulled from the least fundamentally impressive assets first. So long term, what does this mean for you? It means that during this next segment of the market cycle, it'll be very important to find what fundamental projects that you truly like. That is what my man, Mr. Ellio, is absolutely phenomenal with. He's the man for that. I have nothing to say. I step aside in that case. He is the man to go to. He knows the fundamentals. He knows these projects just like the back of his hand. He's amazing. And I suspect that that's going to be a really important thing over these next few months, maybe even next year. And then in the future, those few projects that do survive, they will likely be massively successful. So this is kind of my second warning in this case. I think my first one was a few months a little bit too early. My apologies on that. But in this case, I do think that we're very likely looking at a major reversal here and a major extinction event for many things within this market. And you're likely to see the top 10, maybe even top 20 by market cap really start to change in these next few months to come. So I think that's a good place for me to leave it off. I feel like I'm waffling on a little bit longer than what I should be right now. I want to wish you well, however. Next time I speak with you, I'll be coming back from Dubai, and with that said, take care and see you soon.